Hi, guys, and welcome to the 35th episode of the weekly trading wrap up, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. Okay, so let's begin. As usual, we're looking at a picture of the S&P 500, the market, and this is the week of July 14th, as denoted by the arrow here: Monday, Tuesday, Wednesday, Thursday, and Friday. Another slow grind up. It's up X week, so nothing big usually happens. The market makers usually try to keep it in a range. If something big happens, it's telling, but as you can see this week, nothing really happened. Okay, so we always begin with the technical picture of the market. As always, same as last week, bullish. Okay, solid uptrend past these highs of 613 on the S&P 500, the SPY. Let's put some moving averages, although you don't need them. The red is the 50. The blue is the 200. We had the golden cross a couple of weeks ago. Everything trading above moving averages. So this is a very bullish setup. Okay, let's get rid of that. There's nothing much more to say on that matter, except that if you look at some of the technicals, like here we're looking at the RSI, it's starting to form some kind of negative divergence. Like the market made a new high, and yet the RSI didn't, and neither did a couple of the other indicators that I look at here, the PPO and the MACD. The MACD is on a longer scale, so it's a little bit slower, but this PPO is the exact same MACD if you use the 12 and 26 metrics. And that too is showing a little negative divergence. Okay, so we're getting a little bit exhausted on this up move, and we're entering a seasonally bearish period in the summertime, especially in the second week of July. So as usual, you know that my expectation is we're going to have a choppy sideways market in the summertime. We didn't. I had this expectation around here at 575, but for a long time we've just been going up, and that would be my second most likely scenario, would be just a grind upward, and that's if we have more than likely interest rates falling. But interest rates are pretty much staying at high levels, and the market is at highs. So we're into our second scenario, okay, and if this continues, we're in danger of melting up, which could be another scenario in and of itself. Okay, but from now, I still expect the summer to be sort of choppy. Okay, I mean, even if we go down, if we retest the 613, it's still very bullish. I mean, we can even go down to 590, 585, and still maintain an overall bullish pattern to this market. Okay, so we are in bullish mode, and I'm still holding some short exposure for the summer. Okay, although being up X, like this week being up X, some of that short exposure expired worthless. Some bearish put spreads have expired bullish, although I'm still holding some for August and some that expired in September. But some things like the IWM, which usually lags SPY, which is the Russell 2000, I had some call spreads. I sold some call spreads at 25 to 30s. Okay, and those expired worthless, so I made money there. So I made money on one out of like 4 plays on my shorts, which is great considering that the market went up. But overall, some of my short exposure expired worthless, but because the market went up, my longs made up for it. So it's good to be balanced, because you don't want to enter a period where you're like heavily on one side and the market goes against you, especially when they're like, when we look at sentiment, which is the next thing we should look at, we're getting into extreme greed territory with market momentum at greedy, put call options, extreme greed. Everything's at extreme greed in the marketplace when it comes to the CNN Fear and Greed Index. So it pays to have some short exposure. But if you look at the AAII investor sentiment, came out, it's still, we're getting up there in the bullishness, though not as high as it was 2 weeks ago, but we still have high bearishness. In fact, it increased this week. So that's why I'm still relatively bullish. You should be net bullish, overall bullish in your outlook, because we still haven't seen very low readings in the bearish camp, even though the bulls are pretty high. Not very high. I mean, the average is 37.5. We're only at 39. We're not even at 50 or 45 yet. So this says that longer term, people still feel that extra bearishness. Okay, it's not full bull-on mode. Okay, even though it might feel like it. Okay, so that's why you should still maintain a bullish outlook. Okay. So that's it for the technical picture. Let's move into the macro. There were some significant macro events happening this week. We had the inflation rate. The core inflation rate came in at 0.2%. They were expecting 0.3%, so it was a little bit cold. Okay, 0.2 is very low. It's and that's why that supported the market. So lower inflation means good for the market. However, yields still stayed up because it's still positive inflation. And, we also had the PPI coming in. This was the normal inflation, the CPI. Month over month change was 0.2. But let's get to the PPI here. Core PPI, month over month. 0. So PPI prices, what producers are paying is nothing. No increase. So there goes tariffs. I guess the tariff effect doesn't have anything to do with what people thought it would, because they rely on academic studies, and academic studies say if you hold everything equal, an increase in tariffs will increase consumer prices. Yes, but that's like a play on words, because you can't hold everything equal, because other things will mitigate the increase in prices. Maybe, for example, because the U.S. is the biggest market, the foreigners will pay that tax. They won't pass it on to their consumers because they don't want to lose market share. Or you could have a slowdown in some other places whereby it mitigates that effect. So, as in the marketplace, the marketplace is not hot, but if you sell less goods at a slightly higher price, it won't have an overall effect on inflation. So, we've seen in Trump's first term that tariffs are not inflationary, because the CPI stayed at basically 2% for his whole 4-year term until COVID came. So again, this thing on tariffs is not a big deal so far in the marketplace. Okay, so we had the inflation metrics, and what else did we have? Initial claims, down 221,000 versus 228,000 the month before. So back down, no worry in the job market, everything is okay. So far the macro is good, which of course it was good throughout the whole time here, even when people got the scare here of the tariffs. Nothing broke down on the macro front, and nothing is breaking down on the macro front. But you know that the big thing that I have on macro is that rates are still pretty high. The US 10-year is still around the 4.4 level. Okay, so 4.4 level in the US 10-year, rates are still staying high, and that's why I'm saying that the Fed is not going to cut at all in 2025. 0, not even 2, not even 1. Because if the market stays at highs and we have inflation almost beaten to nothing, why would the Fed raise rates? It's a perfect sweet spot. It's a Goldilocks scenario for the Fed. Market's going up, so they don't have to, so they can keep rates high to stave off inflation that might happen from a hot market. And inflation's going down. So to them, it's like, why would we cut? Unless the market starts tanking in October, September, in the latter half of the year. Or we get negative inflation prints month over month, like inflation at minus 3.3%, minus 0.2%, minus 0.5%, something like that. That's the only way I think or I see the Fed cutting rates. And also the conspiracy theorist in me says that Powell, he's about to leave like in next year. Why would he give Trump another boost and be irrational and cut rates and have this really go into, like have this market really go into a melt up scenario, which would be a little bit irresponsible. The smart move would just be to keep rates high. Keep it high. You're getting an inflation barrier while the markets are going up. It's just, I don't see any cuts in 2025 given these conditions if they continue. If we have the drop, like I said, yeah, he'll cut. But if things stay up and slowly grind higher over the next 2, 3, 4, 5 months, why would he cut? It's irrational. He won't do it. Okay, so that concludes the macro section. So let's go into our last section where we talk about things that interest me for the week. And the one thing that is screaming is uranium. The uranium market is very strong, as observed by the leader in the sector, which is Cameco. Okay, and the uranium, look, you can see like a big week for Cameco. This is Monday. It ended the week with a big move, consolidated highs, and then broke to new highs. Okay, this is the all-time highs for Cameco, $79 US. The sector leader is doing amazingly well. But how is the sector as a whole doing? And by the way, the reason uranium is doing well is because it's a quasi AI play, because all the AI companies that are rolling those build outs require power, and there's no better power than nuclear power. I'm a proponent of it. I have nuclear stocks in my personal account, although not as much as I would have liked, but it's still the go-to source, 100% reliable, 24/7 power, can't beat it. That's why the AI firms like Meta and all that are going trying to secure nuclear deals. Okay, so you have Cameco at highs, you have GEV, which is the GE Vernova, which has nuclear as well as some other energy sources going for it. It's at new highs as well. Okay, but the nuclear sector as a whole, as shown by the Sprott Uranium Miners Fund, the uranium miners, okay, URNM, it's not really at highs yet. Okay, it's only basically, this is like Cameco leading, but other stocks like DML or DNN, which is Denison Mines, yeah, it had this week it's pumped up, but it's still not over new highs, not even close. Okay, although it is catching up, and others like UUU is also catching up. Okay, that is at highs, but that mostly had to do with MP, the rare earth element play in it as well. And thank God, I was last week and the weeks before, I was planning to short it around here. Like, this is a big move in a week. I mean, from $6 to $9 in a week, that's like a 50% increase. It's huge. I was thinking of shorting it here, but the puts were very expensive, and I didn't enter it. And thank God I didn't, because I would have eaten it, would have got my ass handed to me if that was the case. Which, it's good. You don't never overpay. If the trade doesn't come to you, you don't, and it's not there. I mean, not only do you might not make money, which is, if I had a put, I would have not made money. I would have protected myself. But because I had rules that, I didn't want to overpay for a put, it actually avoided me entering this trade and taking this loss. It would have been capped, but still, nonetheless. Okay, so you have other players in the game in the uranium space that are not performing as well as the top players. Okay, so URNM is a proxy, is the ETF of uranium mining. Okay, and that's not at highs. It still hasn't broken past this key level. Okay, of $50. It's at 49. So although it's made an impressive run since April's lows, from 28 to 50 is almost 100% return. It's a great return if you were in at the lows. But in terms of the sector as a whole, it's not performing as expected. And even the leaders, this is why you should be careful now to enter the space. I wouldn't, because the technicals here, you saw some negative divergence. We have higher highs in the stock price and lower highs in the RSI, and the MACD also, it's rolling over as it's going up. Okay, so this is the MACD equivalent. It's PPO, but it's exactly the MACD with a 12 and 26 period EMAs. Okay, so this is like the MACD. Okay, so that's rolling over, and so is the RSI. So this is although it's been doing well, I would not enter at this space. I would look for a pullback and wait till it retests some levels. I mean, you can get back to this high again. I'm going to put Cameco. I'm going to mark the high here. Horizontal line, the previous high. Right here. And it's a gap as well. So if it gets here, yeah, that would be a good entry. Okay, so the uranium sector has been on fire recently, but it's showing signs of a slowdown. And it's especially not a good sector during the summer months, although the fundamentals have destroyed the seasonality. Okay, so you always look at fundamentals first. So I would wait before entering. I'm keeping an eye on it. I will enter it, but only after a pullback, not right now. Okay, so that's it for the uranium sector. And the other thing that I noticed is Bitcoin. We haven't seen this in a while. Okay. So if you recall, during April, we got very lucky. As it was consolidating sideways for 2-3 days, I think we got in right before, or 2 days before this candle came in April. Okay, so we bought Bitcoin here and some Bitcoin proxies, mostly the miners. Okay, but we got out around these levels. Okay, and as it was consolidating at highs, it was good. It was telling you that it was consolidating at strength, and then the breakout is obvious. Okay. So as you can see with the technicals, it's sort of rolling over as it's going to highs, okay? But the Bitcoin space right now, I'm almost out of it. I just have a little bit of Mara, which is one of the stocks that I held. I got out of it at 20 this week. So I was in around 12, but now I'm holding very, very little now. I'm holding almost nothing. I'm waiting. If it just pops up another move to maybe to 25, I'll get rid of the very last remaining shares that I have. But it won't make a big difference, okay? So like you can see the miners here not doing very well. And even Microstrategy, my main vehicle for it, has been doing well since the lows from 236 to 423. That's pretty good. However, it's not past its highs, okay? So even though Bitcoin itself has been doing well, and we did well in Bitcoin, we could have obviously done more. But when you hold Bitcoin and you make good money on it, you thank the stars. I mean, a move from here to here, we captured what is that? At least 80% of the move, from 84,000 to 100 to 110. That's like a good percentage of the move. Okay, so be happy. Another thing that I like to mention on this Bitcoin trade is MicroStrategy. Okay, like MicroStrategy has big moves and it's usually a vehicle to play. But as you can see, it hasn't reached the highs, and it took a big hit today as Bitcoin, just went down a bit. Okay, that's because it's a very leveraged play on Bitcoin. Now, if you want to do some math, if you're buying MicroStrategy as a lever play on Bitcoin, yes, it could work, but it could also bite you in the ass. Why? Because like you can see, look at the chart of Bitcoin. Okay, Bitcoin is through the roof. This looks like a great chart. Okay, it's almost like a head and shoulders ripping, and you could even go to like 150K based on this technical pattern if you believe in technicals fully. Okay, so it is consolidating. It's looking good. Okay, so this little drop resulted in MicroStrategy going down a lot. Okay, so let's do some math. Okay, if you're buying MicroStrategy just for the Bitcoin, I wouldn't highly recommend doing that at this point. Although, you could get away with it, but I'm just saying you're overpaying for Bitcoin. Better just to buy Bitcoin, because how much Bitcoin does MicroStrategy hold? Well, if you go to this website, you can see Bitbo. At last count, Friday, July 11th, it had 601,550 Bitcoin. Okay, seems like a lot. Okay, so let's take our calculator, our trusty calculator, and see how much that's worth. Okay, where's our calculator here? Boom. Okay, 601. What was it? 5550. 601,550. What's the price of Bitcoin right now? CUSD 117,350 times 117,350. That's $70.5 billion worth of Bitcoin. Okay, but what is MicroStrategy's market cap? What are you buying MicroStrategy for? If you look at Yahoo Finance, the market cap at 423 MicroStrategy is 104 billion. So let's say 105 billion. Okay, but our calculator said that it only holds 70.5 billion worth of Bitcoin. So if you're buying it just for Bitcoin, let's move it aside so you could also see the market cap 104. You're basically paying 50% more for Bitcoin by buying it through MicroStrategy instead of just actually buying Bitcoin itself. Okay, so basically you're buying 30 billion of MicroStrategy is the other business that it has. But if you look at MicroStrategy, you know that its other business is utter crap, and it's been crap for a long time. Okay, like look at it, the earnings. We're going to look at the last earnings here. Earnings are coming up 31st of July for MicroStrategy. It's probably going to suck too. But look, it reported minus $16 a share when they were thinking it would lose just $2.44 a share. So it's losing way more than it should. I mean, if you keep going by, it keeps losing money. Minus $3 a share here, minus 100. Even though they think the estimate is going to be zero, it always, loses way more than they think because its core business is crap. So you want to pay $30 billion for a crappy core business when you're actually buying it just for Bitcoin? You're overpaying. You're overpaying by at least 50%. So I mean, its company, a money-losing operation, is worth now above its Bitcoin. It's worth $30 billion, and it keeps losing more and more as you go further and further into time. No, I mean, fundamentally speaking, you shouldn't be buying MicroStrategy for the Bitcoin. I mean, I don't know how long this outperformance should last. I mean, better just buy Bitcoin. Okay, that's why. That's the whole point of this. Fundamentally speaking, I can't justify it, but I mean, the market is the market, and it will react if Bitcoin goes up. So I guess you could buy it, but I'm just saying that. Look, on the downside, it overreacts because it's really an over-leveraged play on Bitcoin. Okay, so that's it on the two things that caught my eye this week. To recap, SPY, let's get rid of this right now. We don't need it. SPY, bullish mode. Technically, everything is bullish. The fundamentals, producer price index, the CPI lower. Initial jobless claims going down. The economy is still strong. Nothing is imploding. Fear and greed index at extremes. We might see a little correction, although not really at extremes on the AAII. We can still go higher. So they're still in bullish mode. The sentiment is not too extreme yet. So even though we correct, any correction will be short-lived, or the depth of any correction should be short, not too deep, because nothing is breaking down yet. Summer doldrums kicking in. We could drift higher under scenario 2, but I think maybe we could be chopping around and then going back up again. Okay, nobody really knows the future, but you should be positioned net long with a little bit of short exposure, in my opinion. So looking forward to next week, and let's see what happens.